I think that price will have some impact on the quality and the enjoyment you're getting out of wine, but it's not, the exponential increases in price don't reflect the same exponential increases in quality and enjoyment.
What are those kind of 3 or 4 champagnes that most of the connoisseurs consider are some of the most prestigious?
Well, actually, Krug have a couple of the wines that are at the very top of the tiers.
This is the Adam Fayed Show for Expat Wealth, and we're delighted to be joined by David today. So thanks for joining us, David.
Thank you for having me.
So David, what was your journey before starting your own business and going into wine, from graduation? Because I'm sure you didn't just wake up one day and think I'm going to start a wine business, right?
well, that's true. So my career started actually as a chartered surveyor, but the important part for my journey into wine was the 1990s. And at that time, I was a stockbroker working in London, private client stockbroker with dealing with equities. And what happened around that time is I'd always been kind of into wine, but being paid probably a bit too much than I deserved, I suspect, at that time. A love of wine turned into a love of fine wine. And I made a lot of friends in the city, and we were all wine lovers, drinking a lot of wine together. I guess, if you'd spoken to me about wine at that time, I certainly wouldn't have called myself a wine investor. I might have called myself a wine collector. But a very interesting thing happened. And whilst I was buying these various bottles from all the big merchants, all the sort of very familiar named merchants, these guys started phoning me up and saying, "Oi, David, can I buy such and such bottles back from you? And I'll give you, 30, 40, 50% more than you paid for it in the first place." So this was kind of the seed that led to setting up a wine investment business, because as a relatively young man working in the markets, suddenly being presented with the concept, the idea that perhaps my passion, the thing that I loved, acted and operated as an investment. And I started to wonder whether there was anything that I could do in that space. So that led me to start to really investigate wine and try and to understand it in great detail, just to see if there was anything that I could do with my skill set to actually run a business in that space.
Sure. So you were passionate about wine, or still are, obviously, and then it became like a business area. So your passion was always a specific type of wine, was it? Like red or white or kind of sparkling champagne, or were you always across the board?
Well, okay, so it's a little bit like picking your children, isn't it? But I'm definitely a red wine guy. So I will gravitate to very old-fashioned Bordeaux's and quite sort of traditional wines. But I have a love across the board, all beautiful wines.
Sure, but is there ever a discrepancy, would you say, between wine that just tastes good per se and wine which is a good investment choice?
Absolutely. Absolutely. So when I first started investigating wine as an investment, I was incredibly interested at how prices are set, because the discrepancy in pricing in wine is, it doesn't make sense when you look from the outside in at a glance. And a case of Petrus might be, $40,000, $50,000, and a case of Duhart Milon might be $400. Qualitatively, they're not a million miles apart. They're certainly not 1,000% apart as the price would suggest they are. So I was really interested in what does set the prices and started to study this in great detail. And what I discovered is that quality, to my great surprise actually, quality has very little to do with how pricing is set in fine wine, and pedigree and history and a wine's status in the hierarchy of its peers and wine at large will have a much greater influence. So to answer your question, I think that price will have some impact on the quality and the enjoyment you're getting out of wine, but it's not, the exponential increases in price don't reflect the same exponential increases in quality and enjoyment, but they do in investment terms.
Well, that's interesting. Do you think, though, when it comes to sparkling wine, which of course includes champagne for the Champagne region, do you think that's even more the case or not? Because what's interesting is when I see, champagne around the world, obviously you've got the Dom Perignons, you've got the Krugs, if I'm pronouncing that correctly, right? Yeah. And Cristals and all these kind of things. And the very expensive ones are the ones that have been aged for a long time, of course. I mean, sometimes they can go into hundreds, thousands, tens of thousands the bottle.
Yeah.
Do you think when it comes to champagne, there's even more of that, like a snobbery, or do you think like those kind of top end champagnes are kind of really, somewhat worth their money, so to speak?
Well, so champagne is quite an interesting sector. I should probably qualify what I mean by sector. So when I sit in my wine world, I've got my investment hat on and my wine drinking hat, and I sometimes get the two mixed up. So for me, geographical regions, you'll often hear me talking about sectors as I would in stock market parlance. And so champagne we would consider in investment terms to be a sector, and it's an important investment sector, and we do have a certain amount of champagne in the portfolios, and it will tend to be the kind of brands that you've mentioned there. Now, I think the thing with champagne is that one of the reasons that it's very expensive is it is so labor intensive and time consuming to make these beautiful bottles. So a lot of that is reflected in the price. But then again, you get this kind of exponential curve in the prices at the end, and you can buy. My go-to in champagne is Taittinger Comte de Champagne, which I guess you'd put in the same kind of territory as Dom Pérignon, perhaps a little bit under Krug. It's in that sort of level. And I think this is wonderful. And you can buy that stuff for about 150 quid a bottle. And then you suddenly see it shoot up to the salons of this world and the really sort of super duper champagnes at the top, which go to 10 times the price. And of course there's not 10 times the effort, there's not 10 times the work, but there is this pedigree. And I think you're right. Whether we might call it snob value but there's certainly a luxury goods aspect to it. And I think this is the key, right? I think this is the key to fine wines and fine champagnes, is that you kind of can't really think of them in the category of being a drink. You've got to think of them much more in the annals of the luxury goods space at large. And luxury goods break the rules of economics. When we get to the very top of the luxury goods space, we get into Veblen goods, where the more expensive they are, the more desirable they become. And that's kind of reflected, I think, in the fine wine space. And so when you're at the very top echelons of champagne, when you're up at Salon and the sort of 3 or 4 that sit right up there above the others, that's what we're talking about. We're talking about luxury goods. We're not talking about wine.
So for those 3 or 4, what are they actually considered by wine experts? Because what's interesting is for like the average person, let's say in the street, who is a wine enthusiast, they might look at, say, the Dom Perignons, right? Yeah. But I believe, from my very limited knowledge, to say Krug, for example, is considered like by the wine snobs, most of them maybe to be a bit above Dom Perignon. What are those kind of 3 or 4 champagnes that like most of like the connoisseurs consider are like some of the most prestigious?
Well, actually, Krug have a couple of the wines that are at the very top of the tier. So Krug make a selection of wines. And right at the top, you've got the Dambonnet, which sits right above even all other Krugs, and it's gulp $100 per bottle. But the incremental increase in quality, I guess if you had the various incarnations of Krug in front of you in the glasses, you would be able to tell the difference. Whether or not, if you were handed these on an individual basis when you didn't have a point of reference against the other Krugs, I think that the common man in the street, I drink a lot of wine and a lot of champagne, I don't know as I would be able to tell the difference at that point. So again, you've got this, you have to again reflect on the luxury goods status of these, and that there's that feel-good factor, that desirability factor of the very top offerings. People want to collect these, they want to own them. There's a joy just in the ownership, not even just in the drinking. Krug, I think Krug's a really interesting case, actually, because for decades, the Krug machine has been trying to convince the champagne world that non-vintage is the way to go. And so Krug release a special edition each year, which isn't from a specific vintage. So it's not from the grapes all grown from one particular harvest. It's blended with dozens, actually, for more than 100, I think, different vintages that go into their Grand Cuvée. And Krug will tell you that's the one to drink. Yet, collectors, the marketplace, still want those vintage Krugs. They want the ones with the date on there, and the ones that go further up the hierarchy. So again, we get back into that luxury goods space and the collectability of it.
So what's the difference then between just a very good champagne or wine, which is non-vintage, and a vintage wine or champagne?
Well, very, very, very simply, a non-vintage champagne is going to be blended with wines that were produced in different vintages. Just for anybody who's listening, I don't mean to teach anybody to suck eggs, but just in case, when we talk about vintage in wine terms, we're talking about the year of production. So it means that all of the grapes came from the harvest in one particular year. So vintage in wine terms doesn't mean old as it does with cars and watches and all the rest of it. So, even the most recent champagnes or wines will be a vintage champagne or wine. So most of the champagnes that you buy in the supermarket, when you buy Moet or Veuve Clicquot or whatever it is that we can get in the supermarkets for sort of 40, 50 quid, those will be blends of various different vintages. And what the winemakers do in those circumstances is they're blending them to make a consistent product. So, if you try a bottle of Moet from 10 years ago and a bottle this year and a bottle in another 10 years, it's going to be a very, very consistent product. Now, the difference when you have a vintage champagne is that all of the grapes have to come from the same harvest, and you will have those nuances that reflect the climatic conditions of that particular year, and some are better than others. I mean, I'll say some are better than others. Once upon a time, there were good vintages and there were bad vintages. These days, viniculture has gone so far that there are great vintages and slightly less great vintages. That tends to be how it operates, but those will have an impact on the price and the desirability. And then, again, when we speak in a while about investment terms, the quality of the vintage will also have an impact on the investability and the time that you should invest in those wines as well.
But can you, as a wine expert, in a blind test, maybe you've done it before, can you tell the difference? So, for example, if you had a normal Dom Pérignon and you compared it to, for example, I think the P2 is like one of their more commercial older vintages, right, from 2003 or 2004, right?
Yeah, late disengorged champagnes.
And then obviously there's some from the 80s and whatever.
Yeah.
Obviously you could maybe see that the taste is slightly different, but do you think you would be able to tell which one is which?
Yeah, I would. So actually, this is really interesting because one of the things that we do at Amphora, we host various tastings and various events, and we like people to sort of get involved in wine as well as investing it, to learn about it and enjoy it. And we host tastings that are called Can You Tell the Difference tastings. And this is because when people are buying investment wines, they're often buying wines that are much more expensive than the wines that they drink. And I don't think a week's gone past where I haven't been asked the question, can you really tell the difference between these wines? So we do exactly these tastings where we do a blind tasting for the guests, and they'll have 3 glasses in front of them. And if we're doing a red wine tasting, one of them will be a super duper first growth, worth $500 or $1,000 or whatever it may be. And a kind of special treat wine, a sort of $100 kind of wine, and then we might have something like a Tesco's Bordeaux. Not even meant as a joke, but only because it's very rare that people try wines across that entire spectrum. And then we have a bit of fun with it. We put some notes on the board, and we see whether people can work out which one's which. And we do the same thing with champagne. And what we'll do in that instance is we'll have a decent prosecco and a decent supermarket wine, a Veuve Clicquot or a Paul Roger or something like that, and then we'll have one of these super duper aged, beautiful champagnes, and we do the same thing. And what's interesting when we do these tastings is that we try and make this as objective as we can, and we're not asking people which ones they enjoyed. We're just writing notes on the board, and what we see consistently, almost always, there's been a couple of David and Goliath moments, but we see a little short list of flavour characteristics for the Prosecco, and then it gets a little bit longer for the middle champagne, and then we're sort of writing pages and pages of the stuff for the final one. So what I've proven time and time again is that it's not just wine experts that can discern the nuances of these wines. Anybody can when they approach it in the right way.
Sure, no, that's quite interesting. And when it comes to the investment now, obviously you started the company, I think it was in about, was it 2008 or 2009, something like that?
2009. We set it up in 2008 in consequence to the financial crisis, not in spite of it. The prices dropped and we thought, we've been thinking about it for some time. So we got the planning done in 2008 and we opened the doors in February 2009.
And what was the kind of core idea, right? Because obviously there's a lot of different wine companies, right? I guess you kind of focused, if I'm not mistaken, on one or two core differentials about how your company would be potentially different to most other wine companies, right?
Oh yeah, for sure. I mean, for quite a long time, I wasn't even sure I would set the business up because going back to myself and my peers, who at the time that I was working in the city, these were people that I drank wine with, and a group of us sort of got together when we were exploring setting up the business, and we were quite clear. We were saying, well, look, we know a fair bit about wine, but we don't know as much as the merchants, so we can't add to the experience that people who are buying from the merchants are getting. We know quite a lot about the investment proposition, but unless we can find a way to overlay our knowledge about the investment process to the wine market, we have nothing to offer. And so we wanted to make sure that we really did have something to offer if we were going to set up a business. We're going to be caring for other people's money, and you have to take that very seriously. And so we agonized over this, and we were trying to work out whether we could build any kind of rudimentary quants or analysis tools. And it's quite hard because, when you strip it back to the core, wine's a drink, right? There's no fundamentals here. It's not throwing off any cash. There's no PE ratios. There's none of the normal stuff that you would hang your hat on in terms of analysis. But what we settled on in the end is we built an algorithm that modeled the market on a relative value basis. And so what I mean by that is that we really started to understand in depth how and why wines are priced. We worked out the determinants of the pricing. We built these into the algorithm, weighted them accordingly, and then the algorithm enabled us to look at the marketplace and say, well, all things being equal, all the wines that we're interested in should be at this price. And if they're mispriced, either too cheaply or too expensively, it enabled us as a small company to hone in and have a look and see if we'd found an opportunity. Now, what happened when we back-tested this algorithm using various disciplines is that the outperformance that we were seeing against the market in index terms was just through the roof. And so that was what actually gave us the confidence to start the business. And that algorithm, quant, I guess we can call it a quant. I think in market terms, it's a very simple and blunt tool. But I think in wine market terms, no one had one at that time. Very few people have got one now, to my surprise. We've put the blueprint of ours out in the public domain, and I still argue to this day that if someone's advising on investing in wine, that they should and must have an arbiter of relative value. And if they haven't got that, then they're sticking a wet finger in the air as far as I'm concerned.
Yeah, because it's interesting because there must be, literally hundreds of thousands of bottles out there, maybe more globally, right? So it's a lot of data points, isn't it? It's probably more data points even than the stock market, because I know the stock market, you've got the small caps, the medium caps, the large caps, and you've got the markets all around the world.
Yeah.
Right. Even the small markets like South Africa. Well, South Africa's not a small market, maybe, but the Kenyan stock market. But when it comes to wine, actually, probably I'm being too modest. There might literally be millions or tens of millions out there. So therefore, all that data, surely a human individual, however hardworking they are, they can't just sift through all the data and say, oh, I notice a difference in this price, right? It's surely impossible, right?
Right. Absolutely. And so it's a bit like, I often sort of equate it to, when we're first learning about wine and you go into a wine shop and you're confronted with this wall of wine and you're expected to know what you want to pick. And you sort of look at it and blink a few times and go, where do I start? And it was like that when we started the business. We looked at this wall of unending wine, possibilities, potential investment opportunities. And of course, it's one of the things that drew us in. Having market guys, we looked at wine and we thought, man, this is quite cool. The depth and breadth of it. This isn't a marketplace that you diversify into that has one homogenous price. It's not like diversifying into oil or into gold or that sort of thing. There's huge diversification opportunities within the marketplace. So we were like those kids in the wine shop blinking and wondering what to do. Now, what was quite interesting about that, though, is that when we started to analyze it and really start to understand it in great depth, we realized that there were very few wines that actually enjoyed a ready and liquid secondary marketplace. There were surprisingly few that you could trade very quickly and very easily. And of course, investment rules is investment rules. You know, if you can't sell it quickly and easily, don't invest in it, or certainly don't invest in it unless you're doing so knowingly that you're investing in something illiquid. So when we actually drew it down, we found that we were only looking at maybe something like 150 producers that we were interested in. Now, some of those produce more than one wine that's investable. So, you know, perhaps we ended up with about 200 wines that we might have been interested in. Now, of course, going back to, we spoke about this a little earlier, the vintage, you know, there are nuances in the vintage which will affect the investability of each of these wines. As a business, we're interested in about the last 20 or so vintages. In fine wine terms, that's young wine, you know, inexplicably to people outside the wine space, you know, who think that at 20 years, wine's going over the edge. In actual fact, at 20 years, these fine wines are just reaching the end of their primary stage. And in those 20 years, they're fungible, which is very important to us with regard to pricing, which we can talk about later. But that means 20 vintages, 200 wines, about 4,000 opportunities we're looking at. But even that, even though that's only a tiny percentage of the worldwide production, it's still a lot of wine, right? And you're absolutely correct that that's too much for a small business to look at on an individual basis, and that's why we needed analysis tools to help us narrow the universe so that we could look at it on a qualitative overlay by the team. Didn't take us all week. We were able to do it in sensible amounts of time.
Yeah, sounds like a bit of a nightmare if you're having to do that, right? So since 2009, what's been the approximate average increase in like a general wine market in terms of annual returns? And how about the kind of wines that you've picked? I mean, obviously past performance isn't, you know, a guarantee of future performance, as we know, and we should say this is not formal financial advice, but approximately what's been like the average trends, would you say, in the last 15 years?
So it's the last 2 years have been, there's been quite a significant correction, which has skimmed quite a lot off of the top. The wine market as a whole, until just before lockdown, was showing close to double-digit returns in index terms. We at Amphora, I mean, there's no Amphora performance because each of our clients own their own bottles. All of the portfolios are bespoke. They're built on different agendas, and so they all perform at different rates. But when we were dealing with people who are engaged with us and they'll have the conversation and reshape the portfolio when it needs to be done, all that sort of stuff, we were enjoying double-digit returns. And it's it is perfectly conceivable and perfectly realistic to get double-digit returns out of the marketplace. Now that said, being sensible about this, this actually attracted me to the market. This isn't a problem. It's just about enabling people to understand the market in realistic terms. The last 20 years has seen a globalization of the marketplace. From about sort of 2005, we saw an explosion in China and across the Asian marketplaces. This is a marketplace that historically was broadly limited to Europe and North America, and suddenly we had a globalization. It's a tiny marketplace, right? Globalization of it caused havoc in prices. We've had huge volatility. In wine terms, we've had huge volatility. Now, of course, I'm a markets guy. I love this. That's that was one of the draws into the marketplace. But it does mean that wine isn't. You often hear people sort of talking about wine, I think, in very old-fashioned tropes. I'm really keen to make sure that these get set into the past where they belong. People always talk about wine. They say, it's very steady. It just ticks up at a modest rate over time. It's non-correlated to the other marketplaces. That may have been true 20 years ago. It's certainly not true now. And we do have volatility now. There is a certain amount of market risk. But that can be managed, of course, because what's beautiful about it, again, if I could remind you that when I'm looking at geographical regions, I might think of them as sectors. They move at different rates and different times. So we can weight the portfolios to reflect what's happening in the marketplace. And because that's an ongoing process, we can then start to make sure that we're getting the very best out of the marketplace. And that's where we engineer the outperformance from those portfolios.
Well, it's interesting. You mentioned obviously this volatility, and there was a big increase during lockdown, I believe, in wine prices. But then in the last 2 years, as you say, the price, it seems, has gone down, which could be a good buying opportunity. But why do you think the price has gone down in the last 2 years?
Yeah, okay. Well, there are a number of factors to that. So if we look at wine specifically, wine had a really good run through lockdown. So when we first went into lockdown, our world, like everybody else's world, our crystal ball went very cloudy, and we sort of bit our nails for a while and went, ooh, oh, I wonder what's going to happen next. Now, what did happen next in our world is that prices went through the roof. And the reason for that is that demand shot up because fine wine as a luxury good was one of the only things that we could enjoy. And so we all, all became raging alcoholics at home through lockdown and drank rather more wine. Now, more importantly for wine, more specifically for fine wine, there was a different effect in lockdown. And that's that the sort of the surplus cash that might have been spent on restaurants and bars and whatever else wasn't being spent. And people upgraded their buying decisions for their wine. So people that were buying $20 bottles of wine started buying $30 bottles of wine. People that were buying $100 wines started buying $250 wines. And there was this shift across the board up into the top echelons where the investable wines are, which is right at the top of the pyramid. The most desirable wines in the world, the rarest, the most sought after. That's the wines that people are investing in. And we saw a huge demographic move up into this space. So we had a really, really good run, and we were seeing the market tick up by, perhaps a 1.5% each month as we went through lockdown. Now that's quite a lot. So we did have quite a peaky marketplace. That was compounded by the fact that there was even greater limited supply to market than we would usually have. Supply to market is limited by the production levels in wine, which these super duper wines are produced in preciously small quantities. Now, of course, because the major merchants who bring the supply to market were operating on half-mast, there was even less of this. So you had a sort of funnel neck process, which again pushed prices up as we went through lockdown. So quite specifically for wine, we had a little bit of what goes up must come down. We were kind of ready for a correction. We're not allergic to corrections. All marketplaces need corrections. Now, the unfortunate thing I think of the last 2 years is that correction coincided with a few problems for the luxury goods space at large. And, it's not just wine that's had a really hard time. If you look at anything from, vintage Ferraris to the watch market to the secondary handbag market, all of these spaces have had a really, really tough time. And that broadly is China-centric. It comes from various factors like a downgrading of expectations of Chinese growth, the slowness of China to emerge from lockdown. That compounds into limited travel by Chinese nationals who historically were spending a lot of money in the luxury goods space when traveling around the world. And all of that had kind of a knock-on effect. Not just, I should say as well, I should qualify here, it's not only into the secondary market for collectibles, but even in the primary luxury goods spaces. I think a very good barometer of sentiment in the luxury goods space is the LVMH share price, and that's had a really difficult time over the last 2 years as well. So we've had those factors as well, and so yeah, you're quite right. 2 years of falling markets. We've had a bit of a change of direction of late, and that's perhaps something that I could elaborate on if that would be of interest where we've got to in the marketplace at this stage.
Yeah, because it seems now that there's been a slight increase in the market the last few months, or at least like it's been up and down, right? So the downward trend has stopped for now, right? Is that a good sign, would you say, potentially for the market?
I absolutely would. So myself and the team, we're on the road now, getting jet lag, flying around to the various marketplaces that we operate in, because we're very keen to let people know what's happening. Now, I guess the wine market is quite interesting. A lot of the information that people will receive is anecdotal, but I would argue that there's quite a lot of activity that you might see in traditional marketplaces. And I won't go into too much depth on this, but what happens in the wine market is that there's a market maker system. Now, that might sound a little bit weird to you. The reason that there's a market maker system is that the major merchants, who are the stockholders, and therefore they control the price, operate to all intents and purposes as market makers. Well, they wouldn't know what a market maker was if I hadn't bit them on the backside. They're not doing this deliberately. But remembering that this is secondary market activity, all of these guys are buying and selling a fungible product. They're selling it in the public domain, so the prices are visible. There's price comparison websites where people who are looking to buy these fancy wines can look at the different prices that the merchants are offering them at. So the way that the merchants build their inventories, they've got to buy these secondary market bottles from private individuals, collectors, investors, people who already hold these bottles. That's the source of supply to the market. So if you think about, if you were a merchant and prices are falling, you're a little bit shy of over-committing to your purchases, both in terms of quantity and certainly in terms of price. So the price that you're going to offer someone to buy the wine from them is going to be very modest. Your bid price, if we can put this into investment parlance, is very low. And so what we see in a bear market in wine is we see the profit margin of the wine merchants increase fairly because they're going on risk. They've got to find a buyer for this stuff. But that's the bid-offer spread is expanding. As sentiment changes, as demand starts to pick up, these merchants say, oh, hang on a second, we haven't got anything to sell. And so they have to start buying a bit more aggressively. And so we first noticed this on an anecdotal basis. So for the longest time in a bear market, every now and again, merchants will contact us and say, oi, mate, have you got such and such, Chateau XYZ for sale? Once activity increases and their buyers are looking for stuff from them, they start coming to us to say, what have you got for sale? Now, that happened at the tail end of last year. And then we've been watching the bid-offer spread, both in terms of the data that we collect from the merchants, the data that we can see on the various trade exchanges, where you can actually see some published bid-offer spreads, and it's been contracting. And that is the sign that we look for in market terms for when we expect there to be a change of direction. And that's what's been happening over recent times. And you're quite right, having seen 24, 25 in actual fact, consistent falls in index terms in the market. We went up in October, we went flat in November, we went up again in December, a little bit down. So we're doing that sort of bouncing off the bottom. So we're absolutely convinced that this is now a buying opportunity.
And if somebody does want to buy, and let's say they become your client, there's two questions here. First of all, if I'm not mistaken, you only go through financial advisors or intermediaries, is that right? And also, secondly, what does it look like practically speaking? I guess realistically, if somebody's going to invest, for example, $30,000, they're not going to have a diversified portfolio, whereas someone who has 100,000, it might be diversified. Is that correct, or is there more to that? And what would be the process in terms of also if they wanted to sell out in a few years?
Yeah, okay. It's broadly correct. So it's not necessarily the case that we only deal through third-party wealth managers, although we do tend to do that in overseas marketplaces because we're a small business, and that's just it's efficient for us. In the UK, it's perhaps more likely that people will deal with this directly, but either way, it's exactly the same service that people will get. So diversification, let's talk about this. Is really important. One of the things that we're really keen on as a business is making sure that people are sensibly diversified. You know, you've got there's so much scope for diversification here that it is, in my opinion, a crime when people buy a case of wine to dip their toe in the water and wait and see what happens. Because in actual fact, they've done nothing more than taken a punt. So we're very keen to make sure that people are sensibly diversified. Now, these wines are, of course, very expensive wines. So there are practicalities to be able to get someone fully diversified within a portfolio. But the levels that you're talking about actually are sort of a £30,000 portfolio. You can get some really sensible diversification into that portfolio, because a lot of the sort of wines that we will deal with will be perhaps £1,000 to £2,000 per case. The wine market, by the way, operates in cases rather than bottles, so 6 or 12 bottles in a case typically. So we can get a really decent amount of diversification into those portfolios. When you go into the bigger portfolios, life just gets a little bit better and a little bit easier for us. Some of the wines that you would really want to see in a portfolio, you know, if you think about first growth Bordeaux, for example, first growth Bordeaux from a really top vintage will be £6,000-7,000. It might be long of £10,000. You can't stick a £10,000 case in a £20,000 portfolio. You've polarized it straight away. So our ability to diversify a portfolio increases with the portfolio size, but that's not to say that we are in any way reluctant to take on board those sort of £30,000 portfolios, because we can still do some still do some great work with those as well.
And how about selling out then? Let's say if a client has seen some good returns or they just need liquidity, what's the process like in terms of selling out on the platform?
So one of my great joys when looking into this was discovering how liquid the marketplace was, with no pun intended, as long as you have the correct wines. Remember, I mentioned that we're interested in about 150 producers. So we can sell those really quickly and really easily, actually. I was quite surprised by how straightforward it was. A point of note, I suppose, at this point is just to say that the wines that our clients invest in are physical bottles. Each of our investors owns their own portfolio and they have legal title to their own bottles. We're not a fund and there's no fractional ownership in our business model. So when said client comes to us and says, right, time to release the profit, or, send the kids to university, or whatever else it may be, we will then arrange to sell those wines on the international marketplace for them. It's kind of like a tender process in a sense. We'll look at the trade exchanges, we'll offer those wines to our international network of buyers. Within 24 to 48 hours, we can absolutely lock in the price that the seller is going to achieve. So they know very quickly exactly what they're going to get in their pocket at the end of the sales process. It takes a little bit of time to release the cash, but it's not crazy. Maybe sort of four weeks, I guess, for cash in pocket. And that's because we have to go through the, just the logistics process of the wines being delivered within the bonded warehouse system. But I think it's pretty good. It's not stocks and shares good, but it's certainly not a liquid like the sale of property and classic cars and various other things which can take much longer.
Well, that's fantastic. And also, what kind of trends do you see in the market in the coming years? We don't have a crystal ball, of course, we don't know. But obviously you mentioned China has been slowing down. Now they're coming out of lockdown, or they're out of lockdown, but they're actually trying to come back. Yeah. And then how about for the business also, you guys specifically? Do you have any new plans for the future? Are you going to try to take advantage of any trends that you see in the market these days?
Well, so the first comment I would make there is that we're quite glad to see the position that we find China in these days. When China was first involved in the marketplace, it created quite a lot of errant speculation on the back. It was a little bit uncontrollable. We were seeing some wines doing sort of 300-400% in 12 months, and people sort of got used to that. And then when they couldn't double their money, they were disappointed, and we're like, oh, come on. So we're quite happy for China to have settled into its place in the market, and it remains an important marketplace globally, but it's no longer the preeminent marketplace. And it's a very mature marketplace these days. I mean, man, those guys learned about wine incredibly quickly. So we're now sort of quite comfortable with the way that wine sits globally. So what we're really interested in is where we perceive the greatest demand will be. And I think this is what's sort of quite interesting about wine. So if you and I were having this conversation 15 years ago, I'd have sat here saying to you, load up the portfolio with Bordeaux, because Bordeaux is the stalwart of the investment scene. And then what happened 15 years ago is Bordeaux shot off. It became disproportionately expensive to other sectors in the marketplace, and it kind of cooled off. And we've spent quite a lot of recent years looking at different regions. Burgundy picked up the mantle and took off. Then Burgundy got to unsustainable prices. In fact, Fayed Burgundy. There you go. There's my investment tip. And then the super Tuscan wines from northern Italy took off, and they took the mantle. And you'll see this happening time and time again, that depending on market conditions, these different sectors, different geographical regions are moving at different rates and different times. And here's a really interesting observation, right? The market, often you can work out what's going to happen next by the differential between different sectors and different peers in the marketplace. I'll give you a really simple explanation of this. So First Growth Bordeaux produce a second wine. It's the wine that sort of made from the grapes that weren't quite good enough to go into the Grand Van. So if Chateau Lafite Rothschild is a Porsche 911, their second wine, Carroir de Lafite, is a Boxster, if you like. And what happened in the Chinese market when they first went crazy is that it was very much a brand-driven marketplace rather than a quality-driven marketplace at that time. And so Carroir gave kind of, 80% of the fun of Lafite for 10% of the cost. So demand went through the roof. And Carroir de Lafite was one of the greatest investments that you could have made 15 years ago. And at that time, you could have bought this stuff for about 30 quid a bottle. Today, you're going to pay about £400 a bottle for it, right? So, it really had a great explosion. Now, what happened as Carroir caught up to the Grand Van, to Lafite Rothschild, is the marketplace, you could see it almost pause, blink twice and say, hang on a second, it's not that much of a premium anymore to get 100% of the fun. So demand moved into the Grand Van. And then the Grand Van moves away, Carroir suddenly looks cheaper, and demand moves back into that. So you get this kind of push me, pull you effect in the marketplace. Now, one of the things that we recognized really early on is this isn't just happening on a wine-specific basis. This is happening on a broad market basis. It happens between Tuscany and Pomerol. It happens between the individual wines of Pomerol. It happens between France and Italy, and on a broader scale. So one of the things that we analyze, and one of the things that goes into our algorithm, is what's happening in terms of these differentials. And so a funny thing has happened that sitting here 15, 16 years after we set up the business, is we're right back to where we started, saying once again, people should load up their portfolios with Bordeaux. And we haven't said that for quite some time. Start of the business, the weighting to Bordeaux, which incidentally has about 7 subsectors, was perhaps as much as 80%. It dropped down to less than 40% over recent years. And I would suggest that over the next year or two, we're going to be, long of 60% again on Bordeaux. Makes me happy. We're back to the old days.
And a final question for some fun. So this is a non-investing question, actually. This is more from a taste point of view. So when it comes to red wine, white wine, sparkling wine and champagne, what are some of your kind of favorite drinks? Not in terms of how they're going to appreciate, just from a taste point of view.
Yeah, okay. So when I'm feeling that I want to push the boat out a little bit, I will always go to Bordeaux. And my great recommendation for anyone who's interested in Bordeaux at the moment is the 2016s. I've just started sampling a few. And you want to go relatively lowly when you buy 2016s, if you're buying the very top one. So even second growth Bordeaux's from 2016, like Ducru Beaucaillou and Monrose and Cos d'Estenel, man, those are years away from drinking. But when you go down to wines like Brand Cantenac, that stuff is wonderful. So a great recommendation will be Brand Cantenac 2016. I would recommend people fill their boots with that stuff. It's unbelievable. But when I don't want to spend 100 quid and upwards, I'm a Rhone man. And you will often find me seeking out some of the finer Côte de Rhône, some of the better Côte de Rhônes. Not the stuff that you can buy for 8 quid in Majestic, but the stuff that costs perhaps 25, 30 pounds a bottle. That's where you'll find me.
Well, we heard it here. So thank you everyone for watching. Thank you as well for coming on today, and like, subscribe and share this podcast. So until next time, have a good day.